7.5% investment grade corporate bonds and how you can buy them step by step on Fidelity. Hello, members and super savers. I hope you're having a good week. So we came across this 7.5% new issue investment grade 10-year corporate bond from Prospect Capital Corporation on Fidelity earlier this week. I thought this might be of interest to some of our bond fans, and in today's video, we'll be walking you through how to buy new issue corporate bonds step by step on Fidelity using the 7.5% new issue corporate bond from Prospect Capital Corporation as an example. As usual, here's our front of video disclaimer. For a detailed disclaimer, please refer to the end of this video. Let's dive in now, folks. First, I'm going to log into my Fidelity account, and here's my account summary page that appears next. Let's click on News and Research now, and let's select Fixed Income, Bonds, and CDs from the pull-down menu. This will take me to this Fixed Income, Bonds, and CDs screen. Let's scroll down a bit and click on the New Issues tab. This will take us to the New Issues section. Let's scroll down again and click on Corporates. And this list of all the new issue corporates appears. Please note that I will be using the term corporate bonds and corporates interchangeably throughout this video. So these column headers here, we can sort by description, the name of the bond issuer basically. We can also sort by maturity date, credit rating, and expected price. The expected price for new issue corporates that are sold on Fidelity's platform is generally $100. These are often referred to as retail notes in the industry. Retail notes are basically bonds that you can purchase directly from the issuer at par value of $100, usually in $1,000 increments with no accrued interest. Retail notes are typically fixed rate, subordinated, unsecured obligations of the issuing company. For those of you in our Bond Beginners course who want to brush up on the topic of subordinated unsecured debt, please refer back to Bond Beginners Module 10 on corporate bonds and Video D on corporate bond hierarchies. And for bond course folks in general, going forward, we will be including the course icon, module number, and relevant video up here where relevant, so that you know where to look in the respective course if you need a refresher on certain key bond concepts. So going back to this Fidelity screen from before, because these new issue corporates are typically sold at par value of $100, this also means that the coupon and the expected yield will generally be the same because there will not be a premium or discount at issuance. We can also sort by expected yield or whether the bond is call protected or not. All the new issue corporates on Fidelity currently are not call protected. And we can also sort by the date when the offering closes. But I usually don't because the sorting function for this column does not seem to work properly all the time. And last but not least, we can sort by the settlement date. Let's go ahead now and sort by the expected yield. And here we see Prospect Capital Corporation, the example that we will be using for today's tutorial. Here's the coupon, the frequency of payment, the maturity date, and the credit ratings. At Baa3 with Moody's and BBB- with S&P, this falls within investment grade territory, just about. This higher risk is likely one of the reasons for this higher return. Remember, a key mantra in the universe of bonds, higher risk, higher return. The expected price is $100, as we've already covered, and the expected yield of 7.5% is the same as the coupon because, as we mentioned earlier, the expected price is par value. This bond is not call protected. Let's click on the No, and here is the screen that shows up, letting us know that the bond is continuously callable after October 15th, 2024. Bond Beginners folks, check out these course videos here for a refresher on call risk and callable bonds as needed. But what this means in a nutshell is that in the worst case scenario, we would only earn this 7.5%, the coupon, on the annualized basis for 6 months. So essentially half of it for half a year. And in the best case scenario, I earn 7.5% annually until the bond matures in 10 years, or whenever it's called earlier, if that happens. And remember, this bond is continuously callable after October 15th, 2024. So back to our original screen. This column shows us that we can place a purchase order for this bond until Monday, April 22nd at 11:30 a.m. Eastern Time. So if you're watching this when we first released this video, you might even be able to purchase this same bond if it suits your risk return profile. Here is the settlement date, the date when this bond actually appears in your account as yours. If we click here, this screen will appear with more details on the new issue bond from Prospect Capital Corporation, including whether there is a negative credit watch status. And if we click on this, here's what appears. We can see that Prospect Capital Corporation is not on negative credit watch status. Let's return to the screen from before now to take a look at this latest Moody's company report that's available here. Let's click on it, and here is the report that appears. Here we have Moody's long-term rating and their rating outlook. I do recommend reading through this Moody's report in its entirety, as it gives a prospective investor a good overview of what he or she might be purchasing. Going back to our earlier screen now, if we scroll down, there is additional information about the bond's redemption, the coupon, and convertibility. And if we scroll down further, we can see that the minimum investment amount is 1, and the incremental investment amount is also 1, meaning $1,000. So let's go back now to our original corporate bond new issues page. These two attributes here. SFP stands for Sinking Fund Protection. A sinking fund in this context is money set aside by the issuer that allows them to repurchase, to redeem a portion of the existing bonds before maturity at a specified sinking fund price. While this may sound similar to the callability feature, there are specific nuances between the two which go beyond the scope of the step-by-step tutorial. What's important to know is that a sinking fund is typically set up by bond issuers, companies of a quasi-lower credit quality, as assurance that they can actually pay their bondholders back when the bond matures. And in some cases, having a sinking fund allows these lower credit quality bond issuers to offer a lower rate to investors than they otherwise could, as the sinking fund reduces the risk of non-repayment at maturity. So basically, from the industry perspective, good credit quality companies don't usually need a sinking fund. And specifically, when it comes to new issue corporates on Fidelity, sinking fund protection means that the offered bond does not have a sinking fund as part of its structure, which also makes sense because these are all generally investment-grade companies with a higher credit quality stamp. Next to SFP from our original screen is SO. SO stands for Survivor's Option. Survivor's Option is sometimes known as a death put. It's essentially an estate protection feature. So if I bought this new issue corporate bond with a survivor's option, and if I died before my bond matures, my estate or beneficiary would generally be able to redeem the bond at par value when they exercise their survivor's option. There are certain limitations depending on the bond issue. Which brings us back to our original new issue corporates page and this statutory prospectus. Let's click on View. And this is the prospectus from Prospect Capital that appears. Prospectuses are usually lengthy documents, and I know some folks don't read through them in the level of detail that they should. But that's not something I would generally suggest doing. As all of our Diamond NestEgg regulars know, I'm never a fan of buying something that you don't understand. So let's say that I've gone through the prospectus, and I'm comfortable with everything. Again, let's go back to our original new issue corporates page and let's click on Trade. And this trading screen appears. Let's select the account I want to purchase this new issue corporate bond in. I'll check everything here for accuracy. Then I'll put a 1 in here because I only want to buy the minimum order quantity of $1,000. Now we'll scroll down and click Preview Order. And here is the page that appears next. I'll review everything again here to make sure that I'm good to go. I am, so I'll scroll down now and click Place Order. And that's it. You've just learned how to buy a new issue corporate bond from Fidelity. So, if at this point you want to learn more about corporate bonds and how to build a bond portfolio, then take a look at this video here to learn more about our bond courses and our YouTube Super Saver membership. Or check out our course and membership links below this video for more details or to join immediately. The next Bond Beginners Live online course session with Q&A is scheduled for Tuesday, April 30th at 6 p.m. Eastern Time. So, because we just used Prospect Capital Corporation Group and its 10-year bond in the example we just walked you through, a few words about them. Prospect Capital Corporation Group, PSEC for short, is a New York-based BDC, a business development corporation that makes debt and equity investments in middle market companies in the U.S. As they say on their website, PSEC invests primarily in first lien and second lien senior loans and mezzanine debt, which in some cases include an equity component. We provide capital to middle market companies and private equity financial sponsors for refinancings, leverage buyouts, acquisitions, recapitalizations, later stage growth investments, and capital expenditures. As we already mentioned earlier, while Prospect is rated Baa3 with Moody's and BBB- with S&P, meaning this is investment grade, it is at the very bottom of the investment grade category. So it's not free of credit risk when compared to US Treasuries, for example. Higher risk, higher return, as the mantra goes. And as I also mentioned before, this 7.5% bond is for 10 years, continuously callable after October 15th, 2024, and will not be listed on any exchange, which may negatively impact its liquidity. So while the 7.5% coupon might look attractive in today's market, please be sure to familiarize yourself with the issuer and the specific bond issue before you decide whether it might be a good fit for you and your personal portfolio. Having said that, the how to buy new issue corporate bonds step-by-step tutorial that we just walked you through can be used to buy any of the new issue corporate bonds on Fidelity. If we sort by credit rating, we can see that there are a number of other new issue corporate bonds with better credit ratings, but lower returns. Lower risk, lower return. Everyone's financial journey is different. All right, members, super savers, and fixed income fans, I hope you enjoyed this video and learned something new. And see you again very soon with more brand new wealth building content for your financial journey.